Hello everyone, welcome to my YouTube channel Smart Learning 24/7, and in my today's video lecture I'll be proceeding with reconciliation of cost and financial accounts. And before I move on with the sum, let me remind you one thing. If you would like to get further notifications of my further videos, please do subscribe to this channel and click the bell icon. So now moving on with the sum. So if you quickly have a look at the question, that is, prepare a statement of reconciliation for the following information, and you have been given a few informations, and the most important highlight of this question will be net loss as per cost accounts, which is 34,500. Net loss as per cost accounts is 34,500. This has been given to us. And if you remember the previous question, the question which we have already dealt in this particular lecture series, like in that question we had net profit as per cost accounts. Okay, but over here in this very specific question it is being told net loss as per cost accounts. So when it comes to net loss as per cost accounts, then in this very particular case our methodology or the way we are working out this sum, it will be a bit varying. Okay, so now we'll quickly move on with the sum. Okay, so the question, we have all noted this down. So now the pattern or the format, it will be like starting up with an heading, which is reconciliation statement. You will be giving a heading, and it will be comprising of three columns, which is particulars column, rupees column, and rupees column. So this will be the format of your reconciliation statement. Okay, and the very first thing which we got to write in our question, in our working, will be net loss as per cost account, which is 34,500. This will be written, that is net loss as per cost account, which is 34,500, directly in our outer column, and followed by the elements which is being given to us in the question one by one. Okay, which is under absorbed of factory cost in costing, under absorbed of factory cost in costing, which is 6,240. This is the information. So basically we do know under absorbing is like we had to get a higher amount, but we have received a lesser amount. Okay, so in this very particular situation, when we are getting a lesser amount, basically we are at a loss. Okay, but if you keenly look into the information which is being given to us, it is net loss. So whatever are your losses, what you will do, you will add this up. Whatever are your expenditures, you will add this up, and whatever are your incomes, you will deduct, and whatever are your gains, you will have to deduct. So that is why at the introduction itself I have clearly told you your methodology of working this problem will be a bit different, because in the previous question when we did up with the calculation, we had net profit. So that what did we do, whatever were your incomes and gains, you added that, and whatever were your expenditure and your losses, you deducted that. But over here, since we have been given our net loss value, so what we'll have to do, all our losses, all our expenses has to be added, and all our incomes and all our gains has to be deducted. Okay, so that is why under absorbed, it is the expenditure or a loss, you can take the either way. So that is why we are adding this up, under absorbed of factory cost, which is 6,240. This has been added. Then followed by this, over absorbed of administrative overheads. Over absorbed in the sense it is excess amount, like we have realized some excess amount through administrative overheads. So basically when you get an extra amount, like it will be a positive value, but over here since we have been given net loss, we will be deducting it. Okay, so over absorbed administrative overheads, which is 3,400, we are deducting this. Fine. Then the next thing will be goodwill written off. Written off means like we'll be deducting the value. Basically it will be like an expenditure to us, it will be like a loss to us, but since we have been given net loss in this question, what we'll have to do, we'll have to consider the opposite way, that is goodwill written off has to be added. Okay, so if you quickly look into the workings. Goodwill written off, it is actually an expenditure. Since we have been given net loss, we are adding this up. Fine. Then interest on investment, it is an income element. That is, you might have done an investment. For that investment you are getting interest, which is an income element. But over here, since we have been given net loss in this question, we will be deducting this interest on investment, which is 6,000 rupees. Okay, so this is the information which we had in the question. So quickly we will do up with the calculations. Okay, so already we have this 34,500 in our outer column. So if you add the additions which we have done, it gives you a total of 11,240. So if you add the outer column positive values, you get the value of 45,740. Okay, and then now if you quickly have a look at the negatives which we have taken, which is 9,400. From this 45,740, if you deduct this 9,400, we get our final value to be 36,340. And what is the name for this answer which we have got? It is net loss as per financial records. Net loss as per financial records. So hope you all remember, in a reconciliation of cost and financial records, we have got two bases. One is as per your cost accounts, and the next will be as per your financial accounts or financial records. So based on your financial records, after doing up with all your calculations, we have got our value to be 36,340. Okay, so now with this particular thing, our workings for this particular problem is complete. So hopefully with a few more questions, I'll meet you guys very soon. And if you have got any doubts or clarifications to be made pertaining to this very particular question, feel free, leave a comment in the comment box section. Hopefully I'll try my level best to clarify your doubts, and we'll meet very soon with one more question. Thank you one and all.